I'm Olivia Bosnenko, and today I'm interviewing James Baraklis of IBEX Wealth Advisors. So James, what are your thoughts on the markets so far this year?
It's been an interesting year so far, and I would probably characterize it as a year of contradictions. In that, earnings growth has been very strong, yet the stock market is one step up, one step back. Economic growth is accelerating. Inflation is rising, yet bond yields are stubbornly low. You have wage growth that is struggling to move higher. Unemployment is the lowest it's been in 50 years, and the Fed keeps raising interest rates. Also, the political environment here in the US and in other parts of the world has been a little uncertain at times, and yet that has not had an impact on the financial market fundamentals. So despite all of those contradictions, the backdrop for economic growth and for equities, I think, still looks good.
How has this year differed from last year?
Last year was a very different year, and it was a very atypical year in that we didn't have a lot of uncertainty in the market, which leads to volatility. So if I pull up a chart on what I deem to be my factors for economic harmony, you had earnings growth that was strong last year. You had an economy that was growing. Inflation was nowhere to be seen. Unemployment was very, very low. And foreign markets, commodities, currencies were all very benign last year. So when all of those things kind of gel together, there's less of an emphasis placed on world news as it pertains to financial markets. Now, that of course has changed this year because we have a lot of uncertainty that has been reintroduced into the markets this year.
What has added to that uncertainty?
I would say number one would be the tariffs and the fears of a trade war. Tariffs were used by governments initially as a method of raising revenue. Now tariffs are used more as a mechanism to protect domestic industries. So when one country is imposing tariffs on another country and it goes back and forth, the fears of a trade war could really escalate and affect global economic growth.
How do you manage around this?
Well, we use a blend of fundamental analysis and technical analysis. And the technical analysis is really fascinating because we have shorter term, intermediate term, and longer term indicators that help us decide whether we're going to put the offense on the field, whether we're going to stay in a holding pattern, or whether we put the defense on the field. And it really is as straightforward as that. It removes all of the emotion from investing.
Have you changed your portfolio at all?
Yeah, so we have rules in our firm around the money that we manage, and we are really steadfast when it comes to those rules. So the first thing that we do is we define the universe of what we are going to own, whether it's in a growth sleeve, a dividend achiever portfolio, an income sleeve. We have a finite universe, and then we chart those holdings every single day. So, for example, this year when emerging markets started to cool off, I reduced exposure and actually exited that position. And the same with financials, because financials, the macroeconomics for financials looked pretty good at the beginning of the year, and yet they have been really underperformers. And when one of our charts breaks a rule, they're sold.
What are your expectations for the rest of the year?
The answer to that question is going to be directly correlated to how much uncertainty remains in the market. So will the US and China be able to come to terms on trade, or does it balloon into a full-blown trade war? And does that wave of protectionism go around the world? That could really impact global economic growth, which would impact corporate earnings, unemployment, the price of commodities and currencies, and that would ultimately produce a lot of volatility. I'm very hopeful that that can be remedied, so we'll see where that goes.
Well, James, how do you guide your clients through this said uncertainty and volatility that can happen?
I like to use the analogy of a balance beam. So I share with my clients that you can have a balance beam that's 4 inches from the ground, 4 feet from the ground, or 400 feet from the ground. The effort to walk across that beam doesn't change. What changes is the consequence of a misstep. So I share with my clients that I make every effort to keep that balance beam as low to the ground as possible without sacrificing returns.
Well, one thing that is certain is you're here for your clients. So thank you so much for the conversation today.
Thanks, Olivia. Thank you.